Good morning. I hope you guys had a great weekend. Just wanted to come out. I know we're working on some tax tips, and I appreciate everybody sharing that. It shows how many people are actually looking for good quality content, free content, good quality content that you can use with your accountants, attorneys, so on and so forth. In all my coaching I'm learning a lot about what people are doing, what they're teaching, and some due diligence. And if I can help you out, my eyes might peer down a little bit just to make sure I stay on track. As you know, I can start really speaking and going off track. But from our home office, I just want to give you a little checklist on what I do when I teach students on notes or private lending. Some of the things you really need to look for to prevent yourself from losing money or having a nightmare on a deal. I'm going to go through a pretty quick checklist with you guys, and usually I do a whiteboard training with that, but obviously you can see from my background I really can't do the whiteboard training here, but I just wanted to get to it. You see my pride and joys up there, my kitties a couple years ago. So I hope this helps you guys out. Some of the things I look for when I do private lending, and like I said, I love being in the bank and love passive income. A reason why I do some private lending and notes and turnkey rentals and hold a note for investors are those reasons. But you still have to, it's not as quick and easy as you think. You really can get burnt either yourself using your own money, your self-directed IRA money, your 401k money. So it's very important to do some of these checklists. You do want to require title insurance on all properties. You need to know who make sure that you're lending either first, second position, whatever you might be. I only like to lend in first position. I want to make sure that there's no tax liens or judgments or mechanics liens in front of me, HOA liens, water liens, any of those type of things. So if you're a first lien lender, you want to make sure you have title insurance. Don't give money out without having title insurance, no matter how fast somebody wants it. You can get it done pretty quick with the right companies. You want to make sure you use professional paperwork. Don't cheap out on this. At least, I've had people ask me for my paperwork, and it's all good and well, but if you're in a state that you have certain nuances in those states, you want to make sure that that paperwork is checked by an attorney, and that's professional paperwork. I don't cheap out on any deal. I use an attorney or title company in each state to file and record. It's just the cost of doing business and the cost to pass on to the borrower anyway, and they're more than happy to pay it. They know you're a professional, and this helps a long way when you raise money to broker out deals for other lenders that aren't active in the business. You also want to make sure you have insurance. You want to make sure that the insurance company has your name on it as a loss payee. So, for instance, if it's your self-directed IRA, it might be, whatever the IRA company is, FBO, your name, IRA number, 1, 2, 3, 4, 5, 6, 7. So you're the loss payee, or your name. God forbid there's a fire or something happens. You want to make sure that the borrower doesn't get that money and go to Atlantic City or Vegas or the Caribbean, that you're going to be paid off in full first before anything extra is paid. So you want to make sure that insurance is taken care of. You want to make sure one of the most important things too is knowing the value of the security and market conditions. I always ask, depending on the borrower, and I don't usually work with too many new borrowers. I work with borrowers I'm comfortable with, I have a long-standing relationship with, and I want to see comps from them. I want usually an appraisal by a third-party appraiser to make sure that the comps are right. Not to take anything away from realtors, but a lot of realtors out there are in the business to market properties and to oversell their buyers. And I'm going to preclude myself from saying that all realtors do this, because they don't. But there are some realtors that are out there that they're there just to make a sale and move on. So you really, you're helping your borrower protect themselves on a deal, okay? So it's part of a coaching, and I always tell people, I said, you're getting free coaching from me when I lend you money, because I'm helping you protect yourself from a deal to make sure that you're getting involved in a deal that you really need to be involved in. Once we get a working relationship with somebody, a lot of times we'll take their comps if we know they know what they're talking about, okay? Then you want to know your borrower's exit strategy. What is their goal? How many months are they going to be into this deal? Are they going to do, are they going to be refinancing, doing, let me close this. Are they going to be refinancing? Are they going to be fixing and flipping the property? Are they going to be long-term holds? You want to make sure that you know that what their exit strategy is. Plan for the worst. I always say plan for the worst and hope for the best. I always tell a borrower, I said, what happens when you stop paying me? I need to foreclose. Not to sound horrid, but I also say, what happens when you get hit by a truck and you can't pay this loan anymore? Because if you don't plan for that, you never have to go and understand. You never have to figure out what happens next. Always plan that you need to foreclose on every deal you do. Okay, so when I say that, is it a judicial state? Is it non-judicial? What is the foreclosure length of time? What is the time to foreclose? When we buy our non-performing notes, we always look at that. We like to buy in areas that are either non-judicial, easy to foreclose, low cost to foreclose, quick to foreclose, because to me, time value of money is everything. If I can't turn that money for myself and my investors, we lose a lot. So you always want to look at that. You want to understand the financial health of your borrower, okay? Do they have any indicators on their credit or a history that shows that they go bad with loans? Bankruptcies, foreclosures, judgments. Now, that doesn't preclude them from doing a deal necessarily. Depends how long ago they did it, depends what the situation was, depends why they have these issues. So I always tell people, they say, well, you're going to run my credit. A lot of times it's not about your credit, it is about the property, but I do want to know who I'm working with because I look at every deal like I'm a partner of yours on a deal. If you're somebody that has no problem going into bankruptcy every time there's an issue, or you have no problem having judgments other than collection type judgments, you have no problem walking away from your debts very easily, then I have a problem lending to you. That's somebody, I'm not an open line of credit, and I don't have hundreds of millions of dollars to lend out, and I'm going to protect my investors' money more than I even protect my own. So I'm going to make sure that we're lending to the right person. So definitely knowing who you're working with is very important. If it's a fix and flip, always make sure you see the contractor's estimate. When you see that contractor's estimate, always make sure you ask for a draw schedule. This is something I teach my students. Very, very important. I teach them draw schedules. Always be ahead of the contractor, never be behind. Always talk about it being your program. And when I say that, make sure that you have a contractor who gives you an acceptable rehab estimate. And in that rehab estimate, make sure the draw schedule matches the rehab. And I see this a lot with newer investors that want loans from us. They'll come out and they'll send us a rehab estimate, and the rehab estimate might say $40,000. And in the beginning, it's, gut the property, let's say gut the property, and they want $20,000 on the first draw. And at the end, it's, install cabinets, granite countertops, stainless steel appliances, finished floors, finished siding, finished carpet, and that's a $5,000 draw. Now, what happens when your borrower takes off on you or gets hit by that truck and you have to foreclose? Do you have enough money to finish the project? Always make sure you have enough money to finish that project should they not do what they need to do and they don't need to be called due. If you do that properly, not only will you never have to deal with a foreclosure, but you'll also help your borrower because they'll stay on top of their contractors. And I do this myself. In fact, we just closed on a property this week, especially Friday when I was out of town. My wife went and closed on the deal. Contractor already started working. Draw schedule's in place. Second draw is being done as we speak. That's how fast they work. When you have a draw schedule, they're going to work pretty fast. So draw schedule is very important. Make sure that you're ahead of the contractor. You're not behind them. That you always owe them money. They don't owe you money. And once you have a good working relationship with a contractor, they know how you work. They know you pay well. They know you pay on time. But they know you're serious about your business. And this is your program, not their program. And if they don't agree to that, then you don't work with them. On the lending side, you make sure you vet that contractor out as well. You don't want to lend somebody money on a contractor that's, sued in court all the time because your money's going to that contractor. This is your project too. You're a partner on that project. So make sure you know who the contractor is. Make sure they're licensed and insured. Make sure you're named as an insuree on that loss pay on that insurance. Okay, you are the bank. Remember that. On all insurance, you are the bank. You are named as the bank on all insurance policies. Okay, you want to verify that taxes are paid annually. That's very important. Tax lien will come before first mortgage. Water lien will come before first mortgage. HOAs usually will come before first mortgage. make sure that that's all taken care of. Okay, and you want to have all that set up. You also want to verify, like I said, when you do title, you want to verify any association fees, senior leads, and see what is paid annually, what is paid monthly, if they're up to date. Okay, so once again, these are the tools that I use in private lending and what I teach. When I used to teach our course, how to raise $1 million or more in 90 days or less, this is how I protect my lenders, and I always tell them that. So when you go out and you borrow private money on the other spectrum, when you borrow private money, you want to actually tell your lenders, I always tell them 5 things: who I am, what I do, okay, how they're going to make money, okay, how I'm going to protect them, and when they're going to get that money back, okay, and what my plans are. So I always make sure I tell them that. And the most important thing is I tell them how I'm going to protect their money. I don't ever guarantee anything. Don't ever do that. And then my other statement is, if anyone guarantees you anything, run, don't walk. But always let them know how you're protecting their money. And if you do your due diligence and you put a package together, and that's what we usually teach, is how to put that package together, there's no lender in the world that wouldn't feel comfortable lending to you, because they know you're protecting their money better than you're protecting their own. And all too often I see a lot of people out there asking for money, but they slap crap against the wall and hope it sticks. And that doesn't work, and you get one opportunity to make that first impression. So I hope this helps you. We are putting together, we're putting together our webinar type feed. Once we have that out, we will start giving our tax tips. Once again, I think we gave our first tip in that first post. You understand, if you're a business owner, you could take and spread your business out amongst your family and ownership and still control it to lower your tax bracket. Once again, everything I say on that side, always check with your accountant or attorney. I'm not an accountant, I'm not an attorney. I don't claim to be one. I don't profess to be one. I don't want to be one. But what I do is, any business I'm involved in, I make sure I do all my own research. I do all my own due diligence, and I learn everything I need to learn about that business to do the best I possibly can for myself and my investors. And I'll take that stuff, and my accountant will talk to you and tell you, I ask questions all the time about how do we do this, why can't we do this, let's add this. And I'll bring tax code in if I need to, I'll bring proof in if I need to, but always challenge your accountants and your attorneys and your and title companies and your contractors and your investors. I hope this is a great podcast, live. I'm sorry, I have podcast in my head so much right now. I hope this is a great live, and you have a great week. And we had a great week speaking in Florida last week. I know we'll be out in New Jersey at the New Jersey Non-Performing Note Expo. So I do see some questions. Let me try to take some questions before I get off. When you get the private loan, where do you put the money if they're also funding the rehab? Do you open a bank account, or do you put an escrow and attorney? I put everything in an escrow and attorney. I stay above board on everything, especially if it's IRA money. You cannot use IRA money in certain situations. So if I borrow somebody's IRA money, I don't have it come to me. I have it go to an attorney, and I do draws. Okay, I hope that helps. Let's see what other questions we have here. I'm going to go back to the top. I'm sorry. Wow, we got a lot of stuff coming in here. Alex, good seeing you. Scott, great. Cody, I appreciate you guys coming on. Ricky, Bravo, I'll see you this week, bud. Carmelo, Joe, great stuff. Cheryl, thanks for coming on. Anthony's king of the pretty house alchemies. If you guys want to learn how to really list your own houses, the higher end properties that sell nice, make sure you check him out. He's got a great program, great coaching program, and the best part is he's very individualized. I think he only takes about 6 or 8 people. Check him out on Facebook. He has some live stuff he's doing, taking an old dog and teaching him new tricks. But great man. Look forward to getting with him and some steak and cigars soon. Hold on a second. Hey, Tommy Zanata, what's up? Staten Island, baby. Another realtor out in New York, ex-cop with me. Great people. Alexander, first position only for us, but what amounts would like, but also what amounts we like to stay? 70-75% ARV. Thanks, Alex. Definitely 70-75% is depends on the market. I usually like to stay at 65-70%. I usually make my investors put at least 20% down. I want skin in the game. Those are the investors I want to work with, partners. If they don't have skin in the game, they're just a bird dog. They're not really an investor. Laura, Charles, God, Kate, thanks so much. Always a good time to go live. I just try to do them when I can in between meetings and calls. And these are, I try to bring it live, and I try to bring real life to my lives, anything that's going on in my business, good, bad, and indifferent. I'll never tell you how great we're doing all the time. I will tell you the truth about our business and the truth about what I see. I got off a great coaching call with some students this morning that are doing phenomenal in the note business. They're really taking the note business to the next level. And it's funny, and I do this, and why I say this is it's just a couple of private lending loans I've done over the last 6 weeks, and a lot of that I've been asked to do. They're in the same situation. They were involved in some joint venture partnerships where they gave money to somebody, and the person's just sitting there doing nothing with their money. And what we did is we helped them out on some of the non-performing assets. And I think out of the 4 or 5 that they had, I think 3 of them are pretty much now performing. And when we looked at this, we thought this was really a complete loss. So the most important thing they learned from this, I would take away, is that they learned due diligence in the future and how to do that. And when you do a private money loan or buy an asset, you really want to do your due diligence. Buyer beware. And I know, like I said, I never, me myself, I don't guarantee anything. All I do is guarantee that I will mitigate your risk as best as I possibly can by doing all my due diligence. So sorry, I'm just scrolling here. I don't mean to cover that. Nathan, good seeing you yesterday. First time in a while. I see you're on here. Alex, exit strategy is a great point. I don't want to hear, I think, you need trust. Great point. It's so important. You're right. Maddie Marinoff, my short sale negotiator, king out there. Real estate recovery group. We're going to be partnering up. Like I said, Matt has a great program, and not only does short sales, loan modifications, but we're putting something together because we both have the need to want to help people stay in their homes if they want to. So I think because we're both so heavily into that, we want to help people out so much that we decided that we're going to bring a new company on board 2017. I know we're meeting about that this week and next week, so stay tuned for that. But Matt's got some great insights, some great videos, and you want to talk about a real deal short sale negotiate. He's the guy. Just don't call him up if you want to cut costs and not pay him. He's not doing anything for free. You get what you pay for. Don't worry about your spelling there, Alex. You're good. Matty Reed, my man. Hope you're out there staying warm, maybe playing some golf, having a nice cigar later. Brent, what's up, bud? And Thorny, good job. Thanks, Matt. Yes, Matt, get 1099s first, always. All right, you want part of your due diligence package, and we didn't go through a due diligence full package, but yes, 1099s is very important. 1099s, copy of identification, stuff like that. You want to make sure you're covered. If you're using a title company, if you use an attorney, like my attorney asks for that all the time, so that's part of our package. You also do a loan application, mortgage loan application. Make sure they fill that out, and maybe at another point we'll go through how we protect ourselves with loan packages, what documents we request in different states. Thanks, Matt. George, thanks for coming on. I appreciate your support always. I think, Tony, we answered your question. And Matt Natch, good stuff. I hope you're back from Vegas. I hope you're good. Hey, Rick, seeing Big Sexy. I thought I was Big Sexy. I think I'm Big Love. He might be Big Sexy. I don't know what they would call each other. If contractor does not fill out the W-9 form, is there a way to still put it on my tax deduction? If he has a company, Catherine's question, if a contractor does not fill out the W-9 form, is there a way to still put it on my tax deduction? If they have a company, yes, you could do that. I make everyone fill out W-9 forms just in case. But if it's a company, for instance, if you go to Lowe's and you buy some carpet, you're not going to ask them for their W-9. I ask for it every single time just in case. But if they do not have a company and an EIN number, which you should have anyway, either an EIN or a Social Security number, if they don't have that, absolutely not. You do not. I mean, I'm not going to tell you how to do your business, but no, you cannot write it off in your company tax deduction. Your cash, if you get contractors that are cash contractors, under the table type stuff, no, you're taking it on the nose yourself. Also, you're taking a huge risk. I won't do it. That's just I will not do anything like that. I will not jeopardize anything. I want to pay a little bit extra for my contract. If you notice anything about me, it's not about saving money all the time. It's about doing things right. I'll pay for the right contractors. I want to make sure they're licensed, they're insured, they have workman's comp. If somebody gets hurt at your house, you're done. If I'm lending money on that, I'm done. So you want to make sure you're covered with that. Okay. I hope that answers your question, Catherine. But I can't tell you how to run your business. But you cannot get a tax deduction if they don't own a company and you pay them. And you need to. So Tony asked. So then, if you don't have a GC and you need to make a lot of little draws, how easy is it to make those draws from the attorney escrow? It's very easy. And Tony, I don't necessarily always do attorney escrow. What I do is I do attorney escrow if it's certain situations. For instance, if you're going to borrow money from private lenders, here's a situation. When I lend somebody money from an IRA, okay, I put in an attorney escrow because it makes it a lot easier for me to go out and get those, just to have the draws done. If I'm lending money from my personal funds, I don't put in an attorney escrow because I could just draw a check at that point. Follow me? So if my IRA lends somebody money, which my self-directed IRA, and I'm sure you guys on this will know, your self-directed IRAs, 401ks, Coverdales, HSAs can lend money on a real estate transaction. And that's some of our tax tips we're going to be talking about in a later event. If let's say it's a $150,000 loan, complete loan, $80,000 purchase price, $70,000 in draws, I'll fund the whole $150,000 minus the closing costs to my attorney escrow account. He will close on the deal. He will hold the excess money for draws in his escrow. I'll do the inspection, or I'll have an appraiser go out and do the inspections. Once that's done, I let my attorney know, okay, release draw number one. Usually within that day or 24 hours, he has a check waiting. Somebody picks it up or he sends it out. Okay, so I hope that helps. That's when I do it. When it's IRA money, I use attorney escrow. When it's not IRA money, I don't use attorney escrow. I hope that simplified it. Okay, is there only partners? And I lend on JV. Great, Alex. I do a lot of the same, obviously. And I don't want to get too confusing people here, but yeah, I do a lot of money deals where I lend with interest and equity position. I don't just do interest on a lot of deals anymore. There are some I still do. So 50-50 splits. Yeah, when I borrow money on a JV deal on my notes, I do 50-50, 60-40 splits, anywhere in that range. It would be depending on who it is. If it's somebody brand new and they want to learn some of the stuff, and I got to teach them. And I try not to teach my investors the business. That's not the type of investors we want, because we just don't have time to do the business and teach them. But yeah, when I raise money on my JV deals for notes, for non-performing notes, and that's strictly pretty much the only time I do that, I'll do it. We don't pay out monthly. We do, because payments aren't coming in monthly. We have to do a ton of due diligence. We have to do a ton of loan modification and workout, ton of legal stuff, ton of rehab, so we can't be paying out those monthly payments. But at the end, we do a 50-50 split. Usually people seeing some nice returns. I don't want to talk about returns on here, but that's kind of what we do. Thanks, Ricky. I appreciate that, brother. Just trying to keep up with your kind of content. But I look forward to seeing you guys and talking about the business as well a little bit, and seeing Mark's premiere. So see you this Wednesday. George, I'm replacing you, morning Tim Ferriss. Well, I don't know if I compete with Tim. Tim's top notch. In fact, I just got I got sitting over there Tim's new book. What? Tools of the Titans by Tim Ferriss. Let me grab it here. Thanks to Robbie and Chase, I just got my new book. My little this thing's pretty big. Not even too many pictures in here. I don't know what I'm gonna do. I need pictures. But one of the books I'm looking at, but I don't know if I could ever replace Tim Ferriss, but he's a great guy. I've had a pleasure to meet him and speak with him. But King of the 4-Hour Work Week, which that book is sitting up there as well, and more like what I live, my life in there type lifestyle. That's what I live, that 4-Hour Work Week. So, okay, most of them want cash payment. I don't know who you're talking about, most of them, so I can't really answer that one. If you're talking about the borrowers want cash payment, I don't understand that at all. But if you're talking about your lenders want cash payment, Yes, lenders do want, some lenders want cash payments, some don't want any cash payments till the end. You talk to your lender, see what they want. A lot of people with IRAs, self-directed IRAs that aren't going to be able to use their money till they're 59 and a half, a lot of them don't want that payment monthly. A lot of them want it at the end, and then the minute they get it, they don't even want it. They get upset they got it. They want to put it back out in the street because it doesn't make money for them sitting in their IRA. Wow, Alex, you're coming to New York tomorrow. I appreciate that. Yeah, I try to give out. Obviously, I don't have a program. I don't have a program. I don't sell DVDs and I don't sell that stuff. I do some minimal coaching with people, but I'm in business and I want to help people with pure content, true content, rather than blasting people online, rather than saying how great we are. Just true content. If you could use it, great. Anything I could help you with, I definitely want to. I would love to hook up with you when you're up here. Let me know next time you're up here. This guy pays no shit. Thanks, I appreciate all those kind words. How long does due diligence take, Rick, on a private money deal? We have it done usually very quick. It depends who it's on. If it's somebody we worked with before, a lot of times we'll tell somebody within hours, yeah, we were able to do the deal. If somebody new and we don't understand the area of the market, which we don't lend a lot in markets we don't understand, it could take us a few days. If we needed a full appraisal, it could take us a week. So it all depends on the situation. But we're opening up another fund. Hopefully, I think it'll be finalized. I'm hoping we get everything done on our side and get an attorney and finalize it by March. And then we'll be raising, we have a lot of investors looking to lend with us. So we'll be opening our fund for that, hopefully by second quarter this year. Alex, I haven't even, I skimmed it a little bit. I haven't even got into it yet. I literally got it from, as a gift from Chase Thompson, Robbie Woods, which I appreciate. Quiz is one of those things. It's so much better when it comes from a gift because you know it means something special to them, and by giving it to us, it means something good. And I know a lot of people have been getting my book that we love lately, and we do the same thing. We try to give it to people we think can help greatly. All right, so I think that's it. I got a couple calls coming up. I got a nice investor meeting today, and I know we're out this weekend at another speaking event for a non-performing note event in Jersey, and I think that's it for this month, and then on to February, possibly Texas in February, and I think our next event might be March after that. So we've limited a lot of our events, just trying to speak at the ones that really help us or help others. It makes sense, but I hope this helped you, and if it did, share it out. The more people we could help, the more business we could do the right way, and we could really turn this market around. And even the newer people in these type of meetup groups that are coming out and not learning how to do it the right way, this might help somebody and help you, and that's why I'm putting it out there. So obviously, like I said, we're not selling a course, we're not asking for money. Just share this info out there so somebody else might get this info and learn, maybe make themselves a little checklist for private lending, so they can actually meet that for their lenders or actually use that for themselves. Hope this was great. Have a great day, and we'll speak to you soon.